Hello and welcome to the third video in our 9-part video series on the accounting cycle. Today's video is going to focus exclusively on the trial balance process. The trial balance process is a very important process in accounting. What you're doing here is you're listing all of your general ledger accounts and their balances at a very specific point in time in a statement-like format to make sure that everything adds up before you actually produce your financial statements. So what do? First thing we do is list all the accounts that we have in our books. Then we put their balances in the ledger, and then we total everything to make sure that it balances up. So when we think about listing the accounts, you need to refer to your general ledger. As we mentioned previously, the general ledger is all the accounts for the company. Each account that has a balance that is not equal to zero will be included when you prepare your trial balance. So you have to have everything. You can't, even if it has $10, you have to include it. You have to include all of the accounts that you have open at that point in time. The order also needs to be consistent with the order of your general ledger, and I'll explain that in a second. When you think of your general ledger, you always start with your assets. First your current assets, then your non-current assets. That's followed by your liabilities, which are your current liabilities, and then your long-term liabilities. And then finally, your equity accounts. Now you look at those three accounts, that is your statement of financial position. So by putting them in the same order as your ledger, your trial balance will actually show you what your statement of financial position is going to look like. We then follow that with our revenues and your expenses, which comes off your statement of comprehensive income. So what you have embedded within your trial balance is your statement of financial position and your statement of comprehensive income. Here's what a basic trial balance looks like. What you see are the accounts on the left-hand side, then a column for debits and a column for credits. And over the next couple of slides, we're going to fill this in. So we said, first thing we do now is list the account balances. Every general ledger account that has some value in it, whether it's 1 penny or $1 million, will be included in this. And it either is going to be a debit or a credit. You need to list the correct account balance on the trial balance in the correct column. In other words, put the debits in the debit column, the credits in the credit column. So when we look at the trial balance we started earlier, the accounts on the left-hand side, the first three are our asset accounts, followed by equity, then followed by some stuff from the statement of comprehensive income. And you'll notice all the assets have debit balances, owner's equity has a credit balance, revenue has a credit balance, and all of the expenses have debit balances, just like you would expect in your general ledger. So that's now basically this step is now complete. What we need to do now is total our columns for balance. So each column, the debit and the credit, needs to be added up. If the debits do not equal the credits, then you've made a mistake, and you have to correct that mistake before moving on. And that's basically where the real value of the trial balance comes in. It provides you a really useful snapshot to identify whether you made an error in your posting to your general ledger accounts. And believe me, when you do it manually, it's quite easy to do. So now what we've seen is our trial balance completed. We have our accounts on the left side, all the debits listed in the middle column, and then the right-hand column are all your credits. And then at the very bottom, everything's totaled up. And as you see here, the two columns equal each other. So are we done? Is it perfect? No. You need to realize there's a number of limitations when you do a trial balance. First off, it doesn't prove that the journal entries you did are correct, or that the general ledger that you used is correct. It just shows you that your debits equal your credits. So if you use the wrong account or the wrong amount, but you made sure the debits and the credits were balanced properly, then everything's going to look okay. But it doesn't mean it's right. So you still need to check your work. All right. Having said that, it's still extremely useful because typically, especially as we automate stuff, you're going to find that the human error diminishes greatly. So the trial balance is a good way to make sure that you had everything done correctly, your debits equal your credits, and you're ready to move on to the next stage. And ladies and gentlemen, that concludes our video on the trial balance process.